Hey guys, welcome to the Wave Crypto Club. We talk about all things crypto. If that interests you, subscribe to the channel. We've been, getting a lot of questions on Bitcoin, some concerns around it. Will the market fail because the market has been crashing? And I was wanting to do a video trying to take up all these top questions that people normally have, the top doubts that people normally have, and try and answer that. And that's when I sort of came across this report somewhere on LinkedIn where people somebody had written this report that says Bitcoin the solution that never was, and goes about criticizing Bitcoin on various parameters. Right? So I thought there's nothing better than this because I can take this report and walk you guys through why each point is invalid or might be incorrectly described. Right? This became very easy for me, and I'm going to do that in this episode. We'll walk you through this report and we'll talk about why some of these concerns are very common concerns that a lot of people, or especially the opponents of Bitcoin, really have are completely unfounded. Okay. Let's start with this. Let's start with actually talking about who wrote this. So this is from Blue Water Capital, someone called Vineet. Right, this was published a couple of days ago. So we'll just go over this. First one is I've tried to highlight some of the interesting concerns that normally come about in this report, and here's the first one. Right? It says merely being powered by an innovative concept does not automatically make Bitcoin a superior currency. A necessary condition for a currency to be superior would be transaction efficiency. Uh, this is like ridiculous, right? Why? Because if you take what he goes on to talk about transaction efficiency, he says in 2020 PayPal processed over 40 million transactions per day, and he gives a bunch of other examples saying that XYZ processed like tens and thousands of transactions, but Bitcoin processed merely 4 to 5 transactions per second. Well, have you heard of the Lightning Network? Now, to begin with, the author solely focuses on Bitcoin and not on the other cryptos that exist. But just to indulge this, have you heard of the Lightning Network? Right, the Lightning Network has been trying to increase, scale up Bitcoin. That's been trying to make Bitcoin instant, scale it, make it low cost, and make it cross blockchain. Right? If you look at these numbers, the Lightning Network can process 25 million transactions per second at the cost of 4 cents per transaction. Right? Why am I talking about the 4 cents per transaction? Because the next criticism is of transaction cost, that the cost of total Bitcoin payment is $140 per transaction. Well, to answer that question, firstly, if you transact on the Bitcoin network, if you move $1 billion worth of Bitcoin, you still pay $140 for that transaction. Whereas if you go with a bank, you're paying in like maybe a couple of $1 million in that transaction. Right? Let's get back to smaller payments. Just Google for MDR rate, and you will find that most of us are probably transacting using some form of credit card or sorts. This is the MDR rate in America. It's between 1 to 3% of every transaction. If you're spending, let's say, about $100, you're paying at least $1 to $3 for that transaction. Lightning Network is ensuring that you pay for a Bitcoin transaction in like 4 cents per transaction. Right? Where is 4 cents? Where is a dollar? Right? The cost of transaction using Lightning Network, even for a cup of coffee, is just 4% of what, or less than 4% of what one of these credit card companies would charge, or levy a fee for that transaction to happen. So that's crazy. That's the difference of the difference of transaction costs, and a lot of people don't understand this. Bitcoin is the underlying currency on top of which many services are being built, Lightning being the first one. So many of those will get settled up. Now, added competition from CBDC. So he says central bank digital currencies aim to cherry pick the useful aspects of cryptocurrencies, overlaying them on top of the extant fiat currency based systems, thereby helping fiat currencies compete better with cryptocurrencies. Well, one, if not anything, this proves that blockchain is such an innovative concept that even central banks are adopting it to make themselves more efficient. So that's a win for blockchain. Whether it is a win for Bitcoin, that is something that we need to see. But it is very wrong to compare CBDCs to Bitcoin, because the whole premise was, when Satoshi wrote the white paper, was that he wanted to create a currency that was outside of government and banking control. And here CBDCs are only making the banks more efficient. So point one, where that does not really hold up. It's not a right comparison, because if you compare Bitcoin versus any other decentralized currency, that's totally different. Here, if you're making CBDCs more efficient, that doesn't solve the problem that people have, which is that they don't trust many central banks across the world with the policies that they're governing. They don't trust one single person or a small set of individuals to run the monetary system. From the 2008 crash to financial crisis or inflationary crises that are present today across the world. Germany is hitting an all-time high in terms of inflation. The eurozone is at an all-time high. To If you look at Turkey's inflation, that's like 70%. Let's not even talk about South American countries. That is precisely the problem that people want to avoid. Making the central bank more efficient does not really solve that problem, right? So that I feel is a wrong comparison. Then the next thing was about the crypto scams, right? That being unregulated is bad, that a lot of people can scam. And I know this is a concern that a lot of people have, that it's not regulated. Why should I trust it? Well, the author here says chain analysis estimates that as high as 14 billion worth of cryptocurrencies would have been lost to frauds. And it's a vehicle for criminal activity. That's what he says. But let me show you something. This is the eurozone inflation. Of course, it was at 8.6%. It's like extremely high. But coming to the point that I was trying to make, which is it is US dollar, not Bitcoin, that is mostly used in money laundering. That the US dollar is probably the most used currency for any criminal activity in terms of value, and it's not Bitcoin. And even in the future, it might not really be Bitcoin, because it's more to do any of these criminal activities. Cash is much more easier, right? As simple as that. If you see this, it says researchers have proven recently that the US $100 bill is the most commonly used currency for laundering the revenue of illicit activities. Let's not even talk more about that. Then, evidence about the fact that Bitcoin is finite. Right? He says evidence indicates that both inflation and economic growth were much more volatile during gold-backed systems than since its collapse. Well, I would say, go to this book called The Bitcoin Standard. Right? The Bitcoin Standard talks about how a simple thing, as the second government started delinking currencies with gold, the number of wars have just increased. Why? Because the government today, their revenue or their money or their resources is the resources of every single citizen, because they've just delinked it from dollar. It is not just their tax revenues, it is all of your money. They can print more money, and hence the number of wars have just simply increased. This is one of the fundamental things that this book talks about. I would urge all of you to go and read it. It's a great book talking about the monetary policy, the problems of the monetary system that we have today. And here he says being finite isn't a virtue, not for currency. Besides, Bitcoin isn't really finite in the true sense. When Bitcoin per se is finite, you can have a Bitcoin 2, a Bitcoin 3, and so on. That's ridiculous, right? You're having a currency 1, a currency 2, and a currency 3, and so on. Right? Every country in the world today probably has a currency. There's a US dollar, there's a euro, there is a British pound, there's an Indian rupee, there's a Chinese yuan. Every single country has its own currency, and in fact, it's not just limited to a government issued currency. You can pretty much assume like whatever you want as a currency. In certain prisons, cigarettes are used as currency. So that's not really an argument. Bitcoin had a 40-45% kind of a dominance in terms of market cap back in 2017, like more than 5 years ago, when there were roughly about 5,000 tokens. Today in 2022, Bitcoin still has like a 40-45% dominance when there are 18,000 tokens. Of course, there'll be many currencies, right? But over a period of time, one currency will gain a more adoption, right? Which will become better of the lot. We saw that happen with fiat currencies as well. If you take the last 400 years, we went from the Dutch to the British to now the American currency, that is the global reserve currency. So if in the last 400 years, we have changed, the global reserve currency has changed 3 times. So what is it to say that currency should not really change? You can have a Bitcoin 2, a Bitcoin 3, whichever is better. That's what people use. Ultimately, you just want to solve a problem that exists today, and Bitcoin is the first attempt at solving that problem. Money printing. He's talking about saying that at least in this instance, investors have continued to put their trust on fiat currencies, not Bitcoin, debunking the no trust in fiat notions. Bitcoin actually demonstrated striking resemblance to speculative assets. Well, let me first show you what money printing has done. In the last few years, excessive money printing has resulted in inflation rising to 8.6%, the highest ever, in several decades. Eurozone inflation, take American inflation, take any inflation in the world, you'll see any country in the world, inflation is at all-time high. Simple fact that they were continuously printing money in the last few years. Adoption to be the value of the benefit of increased adoption of Bitcoin, if Note, will be enjoyed by those who use it. As an analogy, a shopping list that you make on Notepad application in the Microsoft Windows would be more useful to you, but not to Microsoft. I mean, there's nothing more ridiculous than this. If Microsoft is creating something, that's because they want people to use it in their own way. If you have Excel, there are people who are making games on Excel. Somebody is probably using Excel to calculate their monthly spending. Somebody's probably using it to track their company's budget. Somebody's probably just using it to play a game. That Microsoft doesn't really care about that, right? Microsoft is going to make money out of whatever you do with it. The more use cases you have for it, the better. So I really don't understand this point. As more adoption happens, of course, price is going to increase. More people want it. If more people want something, this is the first theory, the most basic thing in economics, right? If demand for something is high, the price is going to rise, as long as supply is not infinite. And in this case, we know that supply is not infinite. So, bizarre argument, to say the least. And then there's the greater fool theory. Even Bill Gates mentioned this. They say that the drivers of market price is that an investor buying Bitcoin at a high price, hoping that a greater fool will buy it from her at an even higher price sometime in the future. So this makes sense if what you're buying does not really have a utility. Bitcoin has a utility. Take the people who fled from Ukraine, during the ongoing war. These people could not carry their houses, their books, their cars, barely anything. Half of them ran with probably one shoe or such. Many of these people who ran out of Ukraine today are surviving because of the crypto assets that they had. Isn't that interesting? There were NFT artists who were surviving on the income from their crypto assets. Some people who had Bitcoin, they're surviving on that and not really on what they owned back in Ukraine. Can you see the difference? Now, even when Ukraine is at war, let's say their banking system collapses, if the citizens of Ukraine had Bitcoin, then they would still survive outside of Bitcoin. If outside of Ukraine, if their wealth was in the form of Bitcoin or any cryptos, they still had a chance of surviving on their own wealth. There cannot be a greater use case than that. It simply makes central banks redundant. It simply makes you much more safer, because today you have an asset which you can just write down and run across the country, and you can still access it somewhere else as long as you have a phone and an internet connection. And I don't think any of those people were greater fools, right? Because they're all surviving today only on Bitcoin. And then he says source of value, the collective belief system. Fiat, the value of an equity share is backed by expected future cash flows. Fiat currencies are backed by the faith and credit in the government's. Non-utility assets such as gold and Bitcoin are backed by collective belief systems. Now, if this line itself, that fiat currencies are backed by the faith and credit of governments, this is what Satoshi really had a problem with. If you go to his white paper, this is the thing that he wanted to solve, that the faith that you are putting in the government or in any central bank to ensure that the monetary system is stable was violated multiple times in the past, and hence Bitcoin was born. Bitcoin was born where instead of you putting faith in the government, you're putting faith on a code that cannot be corrupted, on a system which is driven by nodes across the world, which cannot easily be corrupted. There's no economic value to corrupt it. So if you're putting your faith into something better, something more efficient, something where humans, the human touch is lesser and lesser, then that's much better than putting faith in single authorities. Now, he says store of value. Should Bitcoin's price fall too low, it could disrupt the mining operations. If that happens, Bitcoin would be worth nothing. Bitcoin's price has fallen low multiple times. Every time Bitcoin, every cycle, after every Bitcoin halving cycle, Bitcoin prices goes up and crashes about 80-85% from its all-time high. That does not mean that mining has just stopped. It has happened 3 times. This is probably the fourth time. So that does not mean mining has stopped. It is continuing. So this argument makes no sense to me. And what lies ahead? So he says there are a few catalysts that can lead to the downfall of Bitcoin and the general crypto market itself. First one is regulatory clampdown, criminal activity. Governments are going to put regulations around it. Well, a lot of governments are adopting Bitcoin as a currency. It could be small governments, El Salvador, Central African Republic. Many more governments are willing to, regulate it for the good, not for the bad. And if you take countries around the world, from Israel to Russia to Ukraine to the Middle East, countries are trying to make regulations that favor cryptocurrency and not oppose it. So, sorry, that's a bad example. That's a bad argument. And then deflation risk. Deflation adversely impacts demand. Low but sustained inflation is desirable. This is go back to Bitcoin standard. This is pretty much explained there. This cannot be an argument at all. Right? In fact, there is an interesting study in that book which says if you link the price of everything to gold, right from the times of the Greeks to now, you will find that the price, if it was measured in gold, has been the same. That means if you're paying for milk in X grams of gold back in the Roman times or the Greek times, even today you would be paying approximately that much, minusing all the fiat conversions. So inflation has only made things has only inflated the value in visually, but not really in the true sense. Growing environmental activism. Bitcoin is mining, and Bitcoin mining is energy intensive, and a lot of people oppose it. Well, if you look at this, the report, Earth Day analysts say Bitcoin mining is naturally gravitating to green energy. Bitcoin mining is becoming more and more efficient. In fact, there are a lot of people who are today. Yeah, here it is. Bitcoin consumes less than half the energy of the banking or gold industries. Right? If you see this, the banking system, gold, and Bitcoin. Bitcoin is consuming today less than half of what the gold industries are consuming, and moreover, this is not considered, let's say, the physical infrastructure, the number of people who are walking into a branch, and all the associated things, not just the branches. This banking system is purely talking about the data centers, the bank branches, ATMs, and card networks. There is much more to the banking system than that. So this number is severely understated. Bitcoin number is of course completely computed, albeit of course that it is at a lower value today, but still, even if transactions scale up, with developments like Lightning Network and so on, it will not significantly impact. In fact, if you see a lot of companies, let's say oil companies, right? Oil fields generate about 40% of the world's energy. However, they produce methane as a byproduct, whose greenhouse gas effects 45 times as environmentally damaging as those equivalent to carbon dioxide. And a lot of these companies today are using methane and building an infrastructure to capture this methane and mine Bitcoin. This means that oil producers can ensure a 24x reduction in emissions compared to venting the methane into the atmosphere. And this is happening across the world. Either oil companies are trying to use the methane and the byproducts, which would have anyway been burnt off, to mine Bitcoin. So one, you are using it for a better purpose, so you have Bitcoin mining energy coming in from such sources, or you even have Bitcoin mining energy coming in from renewable sources. So overall, the system is changing. This cannot be a great argument at all. Forking will not really talk about that, because we know that Bitcoin had dominance when there were 5,000 tokens. It has the same dominance today when there are 18,000 tokens. Rising energy costs. Well, the cost of energy is rising, but given that Bitcoin mining itself is becoming more efficient, Bitcoin economics will improve as more and more use cases go up. Then you have Bitcoin price appreciating, Bitcoin mining economics in the long run will definitely work well. Concentration of risk. Right? He says Bitcoin is vulnerable to something called the 51% attack. Such concentration can happen again, especially if Bitcoin mining rewards become less profitable. So what he's trying to say is that the Bitcoin system can be compromised If there are 51% of the people, or if 51% of the computing resources are controlled by a small group of people who can attack it. Well, in many of the community posts that Satoshi had put up, he very clearly described why it is difficult, because there is no economic incentive for anyone to do that. Now, let's say hypothetically someone did manage to do that. What would happen is that the broader market will reject this currency itself, because now it is compromised. So the person who did it, he needs to spend billions of dollars to do it, and then get a system which is worthless, which does not have any value. Even if he owns all the Bitcoin in the world, what's the point? He will never be able to do anything with it, because nobody is going to accept it. It's as simple as that. It will be worthless. So there is no economic incentive for anyone to do this, and Satoshi beautifully describes why this is not possible. Theoretically it is, practically it's not possible. And then he's talking about the investor base exhaustion. There are two sources of new money: existing investors putting in more money, new investors dabbling for the first time. He says existing investors might not put in money. Bulk of the newbie investors who are new to Bitcoin can barely distinguish between blockchain and Bitcoin. While that is true, a lot of new people barely can distinguish between blockchain and Bitcoin. Do you think every person who uses a credit card even knows how it works? Do you think every person who uses a US dollar or a euro or a pound knows how this money was printed? What is, like, a lot of people still think that it is backed by gold. So awareness is not really awareness of the finer details of the technology or the process underneath is not really a measure of anything. He leaves us with two questions. He says, are existing investors looking forward to doubling down at lower levels, or are they frozen with fear? Well, if you look at this, as Bitcoin crashes, data shows whales are buying the dip. So there you go. You have the answer for the first question. Existing investors are looking forward to doubling down at lower levels. Whales are filling their bags quietly with all the Bitcoin that is cheaply available today, which is probably at a 70% discount from its all-time high. Second question. Are too many of the new investors yet to join the Bitcoin party, or are most of them already worrying about the recent sharp dip and fall? Well, Bitcoin on-chain analysis says the number of new Bitcoin addresses reaches an all-time high. New investors are still coming in because people see merit in this system. Overall, I feel that these were the list of concerns that a lot of people have, and this report beautifully compiled all those concerns into one place, so made it easier for me to explain all that to you with data, with news reports, with actual analysis. And a lot of these concerns are completely unfounded. Bitcoin is a 15-year-old asset, right? Please remember this. Bitcoin is a 15-year-old asset. The gold is like a 5,000, 10,000 year old asset. If you take the monetary system that we have today, it is at least, like, the present monetary system might be 50 years old, or 70 years old. The concepts around this broader monetary system, it is at least 500 years old, or if not more than that. Bitcoin today, which is 15 years old, is competing with a system that has been in existence for hundreds of years. Right? And we are all early adopters. Less than 15% of the world owns a Bitcoin, or even a fraction of a Bitcoin. And awareness is building up. And I can tell you this because I teach students online about cryptos, and my students are all kinds of age groups, right? From 15-year-olds to 60-year-olds. I have all kinds of people who are trying to learn about this from all parts of, from the most diverse backgrounds possible. So awareness is definitely increasing. This asset class is trying to solve a problem, and a lot of people do believe that this is possible. To compare at a very early stage in this is completely wrong. It is taking time. It is we already saw that a number of these concerns are not really concerns, and it's only a matter of time before which this becomes a much more efficient systems and will be used in daily life. I already use several blockchain based applications. I'm sure all of you do too. Bitcoin as a currency itself, or if not Bitcoin, at least some crypto as a currency based on the blockchain technology, we might be seeing it very soon. But for today, I can very clearly tell you any concern that you probably read here is completely unfounded, and I feel that there is a great future to this, and I'm totally optimistic about that. If you enjoyed this analysis, if you liked it, then please hit the like button, subscribe to the channel, tell your friends about it, and welcome to the Wave Crypto Club.